Welcome to A Canadian Investing in the US, a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the US with Glen Sutherland. This week, my guest is Raheem Madjavi. Raheem is from Knightsbridge FX, which is one of the currency exchanges that I use on a regular basis. You want to start off by just giving yourself a bit of an introduction, anything more elaborate to go into about yourself or Knightsbridge?
Sure. So I co-founded Knightsbridge probably almost 15 years ago, and really we provide better exchange rates than the banks. We're trying to keep the banks honest. And when you're buying or selling US dollars, the banks kind of hose you on the exchange rate. They charge, several percentage points. We try to skim that down and, save people some money. Was involved in investment banking, private equity prior to that, and then decided to basically become an entrepreneur, grow a business. And, we're having a lot of fun. It's a good time growing company. And it's always nice to, also save Canadians money along the way. So.
Yeah, and if you're a Canadian investing in the US, it's very important to figure this out. I know I won't do bank name drops, but I know on my first transaction in the US, I sent a whole bunch of money down from a Canadian bank, which I'm not going to list, and they messed up the wire, and it came back, and then it had to send it again, and I paid the exchange rate on that at a higher rate to go there, to come back, and then to go there again. And whoa, when I look back at it, it was like over, I don't know, it was like $600 in just extra fees from that extra transaction. And especially if you're gonna go, maybe I shouldn't be saying this on a Knightsbridge sort of podcast, but if you're just transferring like $100 to go to a vacation or something, it's not that big a deal. But if you're gonna buy real estate or something, you're gonna feel the difference if you skip out on actually finding an exchange company like Knightsbridge to transfer the money. Um, Raheem, let's dive into this. I know like we've had you on the show several times. I think I'd like to talk about like where we see the dollar going, and then some of the some stuff about Knightsbridge as well. And I kind of touched on that, but if there's anything more to that, so maybe let's dive into what it would look like. What it's going to look like across this year. I know right now we're hovering probably, I didn't check the rate today, but 1.38, something like that to buy US dollars. Do we see that going up? Do we see that going down? And I'll put a disclaimer in here. Like this is, even though he's in that business, nobody knows. So this is just our best guess based on what we know. So don't liably hold either of us on any of this stuff.
Yeah, absolutely. And I mean, I think the way I would start is like, what a year, right? Like, what a last year. Things are always interesting, in currency, in business, economy wise. And, what a year we may have in 2026 as well. But, even if you just take a step back and say, just look at the last year, obviously, new administration in the United States, a very forceful, different administration than what was there before. I'd say heavily focused on the economy. I mean, you've got someone at the top that really wants to put their thumb on the scale on the economy, loves business, that type of stuff. And, we saw a lot of volatility last year, right? We saw the US dollar rise quite rapidly. Then we had Liberation Day with the tariffs. All hell kind of broke loose. Lots of policy changes, at the whim of, the administration basically, and everyone's scrambling to figure out like, what does this mean for the rest of the world? It was quite a volatile time in the US. Things have settled down a little bit in terms of the knowledge we have to date from last year to date is that the economy is a little bit more resilient than a lot of people thought it would be, I would say, for Canada, in the sense that it could have been a lot worse, right? I mean, right. We really could have been knocked down. That's not to say we aren't, but it could have been a heck of a lot worse, considering the dependency. And Canada's actually been relatively resilient. I mean, if you just look at the Canadian stock market, it's done really well over the last year, which is a great sign, right, for capital markets and just that money is going to be flowing into Canada as a result of that. People obviously chase winners. Gold's gone up, minerals, all that type of stuff. Canadian banks always do well. I think focusing back on the Canadian dollar in terms of 2026, the general consensus and the key themes to always basically kind of think about, the way I look at what are the key triggers of what could happen. So one is interest rate differentials between Canada and the US, and we can go into each of them into a little bit more specific detail. So one is interest rate differentials, Canada and the US. That is a huge driver of where money flows. And the reason for that is, if just to simplify kind of for the audience, is if someone raises interest rates, people start moving money into that economy because they're getting higher rates. Right. And when they move that money into the economy, they're buying that currency. That makes that currency appreciate. So higher interest rates in a local economy pushes their local dollar higher. Okay. Yeah. The second thing is jobs and GDP. So if the economies are humming, everyone's employed, that generally means GDP is going well, the economy is going well. Probably an attractive place to put money, and where money is probably, kind of flowing.
And yeah, if everyone has jobs, then you can raise the interest rates and it'll all just continue.
Yeah. And it's a bit of a flywheel. They're all kind of related together in some aspect. If you got a really weak economy, rates are generally pretty low. If you got a booming economy, then, rates are generally a little bit higher. For Canada, I would say the other thing is also, oil prices and just commodities in general. I mean, we're less so a petrodollar, but we still are in a way. We can still see those general correlations with oil commodities and things like that. So that's something to look at kind of for Canada. And then also we've got, a bit of a kind of tail end risk in the middle of the year with CUSMA and, and tariffs, bit of a wild card. Now, generally, I would say Canada's handled it, pretty well, all else being equal. And maybe, we'll really start to figure out what's going to happen, in the next 6 months to a year to really see like who is, how strong really is the economy. So, I mean, those are kind of the big high level factors of when you're thinking about currency and whether it's up or down, is how do those specific segments play out? And then again, it's on a relative basis. So if both economies raise interest rates or lower interest rates, then the relative differential is nothing. So it's always relative to something else. So I would say, if we kind of just start at the high level and then you can ask me some questions, we can get into more details. I would say, I think we should expect still some volatility this year. It could be volatility to the upside and downside, mainly around a lot of the way the administration is just handling things. Maybe they have a plan around it and maybe chaos is part of the plan, but it's really like someone could wake up tomorrow and say, hey, we're doing 25% more tariffs on aluminum and steel, and you get it on a tweet, and it's kind of how it works. Or, you piss someone off and it can happen. So, but maybe there's, more logic on their end behind it and we don't see it, but there can be some more volatility in either direction. So I think we'll start to continue to see that volatility. I think the loonie last year hit, around 136 in June or July of 2025, went to a high of 141, 142, maybe even higher when the whole world seemed like it was kind of blowing up. So that's kind of the range by which I probably see also potentially for this year. I think there's going to be a lot of volatility continued volatility in 2026. I think over the long term, I think Canada will be okay. At some point, we will figure out how to maximize the resources and the economy that we have in Canada, and how to best grow our local Canadian economy in some sense of when, our backs are against the wall. You really have to find ways to grow the economy. Part of that's going to come from heavy deficit spending and investments. And part of it is just, you got resources in the ground, you get them out of the ground, you can sell it to someone. Right. Do we want to do that or not? And I mean, there's huge discussions around it from a high level perspective, and, people feel differently about all that stuff. But if that happens, the economy grows, and a lot of money is going to flow into Canada as a result of it. So I think part of the overhang in Canada is that there is this threat of tariffs or threat of CUSMA kind of falling apart, and we really don't know the ripple effects of that. It could have a pretty significant impact, and it might not bode well for the loonie. But for the most part, everything's been pretty resilient. You'd have to think minds will meet at some point and figure things out. And you kind of have to hope the right people are at the table to be able to do that, and they're taking it as seriously as they should be.
Yeah.
So I think over the short term, I think we continue to see volatility until at least the middle of the year, until CUSMA breaks, happens, gets extended, provides some sort of indication on, hey, we're working on a deal and it might take another 6 months, or whatever the outcome could be. But there's obviously some extreme outcomes that can happen. The second thing that's really that I think can drive the loonie a little bit higher, and I don't think we're going to see a drastic change. We're not going to get to the levels of when the Canadian economy was really humming back in the day, when we got close to par and oil was at $120 a barrel and all that type of stuff.
Right.
Is really interest rate differentials. So in the US, you've got a pretty strong economy. You've got an administration focused on having a strong economy. And most of that seems to be working generally well in the US. Obviously, there's areas that there's ebbs and flows with everything, but from a general perspective, I think economic growth in the US is strong and outpaces Canada pretty easily. The difference is yeah.
Sorry to cut you off. It just got popped in my head. But if you're talking about interest rate differentials where we could make up some money, like that means that in likelihood, then you're thinking that interest rates would go up in Canada and maybe the US wouldn't move up at the same rate or be. Are you looking to invest in the US? Are you looking for a coach that has been doing this for much more than 1 year? In fact, doing this for almost 10 years? Do you want to do one-on-one calls? Do you want to actually have someone looking at your deals and actually thinking and worrying about your projects? If that's of interest to you, I'd love to get on a phone call with you. Go to glensutherland.com or at CanadianInvestingInTheUSA.com and schedule a call. We'll just do a quick 15 minutes, see if it works for you.
Yeah, it's actually, And so what I think is happening is Canada will stay flat. Okay. And the US, I was just about to say, is the US administration is really trying to get the Fed to lower rates, and they're putting a lot of pressure on Powell, and they want to get him, he's going to get out, or he might get out, or whatever the rules are of how that all happens. But at some point, he has to leave his spot, and whether he stays on as governor or not, or resigns, or there's a lot of moving parts there. But it's pretty clear the US administration wants lower interest rates. Right. And I think Canada's economy is humming along enough to not be in a position to lower rates. I think Canada is going to stay largely flat, where the US is going to put pressure on the Fed to lower rates. And so that differential, even though Canada is not increasing, it's not decreasing, it's flat, and the US is looking to go down, that differential is going to push the loonie a little bit higher. Hopefully I've explained that.
No, that makes a that makes a lot of sense. And even like ever since Trump's come in, I could be completely wrong here, but I understood that the U.S. needed to renegotiate a lot of debt, and Trump wants to do it at a lower interest rate. So he's
for sure, yeah, and
pressure to put it down.
Yeah, and so as I said, he's got very strong views of how he wants to run the economy. He's a business person. He wants to figure all that out, and I think that he is going to put pressure on the Fed to lower rates. So I think ultimately that will happen, and I think that's going to make the Canadian dollar rise. That is a headwind for the US dollar.
Right.
And so basically, I do see the loonie slightly appreciating a year to a year and a half out from here. Maybe it gets to the 133 to 135 mark, perhaps. But that's if everything goes well, right? On the flip side, US economy we know is humming people, I mean, he's attracting the U.S. administration is attracting all types of investment in the United States. Build your plant here and build chips here, and more of that's going to continue, right? You got all this money from the Middle East, and you got all these different people like, just trying to build a relationship with them and saying, hey, I'm going to make all these investments. I mean, those are real dollars and big dollars. Like, it's not millions, it's billions, right? So I think on the flip side is that the US economy could just potentially outperform, do really well, whereas Canada could be caught a little bit flat footed. And if that happens, I think you see the continued increase in the US dollar on the flip side. So the scenario for the US dollar to increase is they don't lower rates because the economy is just so strong in the US. And he can't figure out, the US administration can't figure out a way to accomplish what they need to do with the Fed or what they want to do with the Fed. And generally, when you lower rates, you start to get inflation. If you start to get inflation, you'll raise rates to combat inflation, et cetera, et cetera. So I think US economy does better than the Canadian economy. It's just, they're just better in a lot of things. But I think there is a bit of pressure on the Fed to lower rates, which is a benefit for Canada. So if you think the Fed's going to lower rates, I think the loonie go up a little bit. I think if you think Canada can't get a deal for CUSMA, doesn't know what they're doing, can't get out of their own way, then probably doesn't bode well for the loonie. It comes down to whose economy do you think is going to be better on a relative basis, all else being equal. And do think the US economy is going to be better, it's just how much better. And that differential is what drives the increase or the decrease from where we are. So I think we're at a general level position. So those are the two ways to kind of look at it. The jobs reports in the US are pretty good. Canada's doing okay. I mean, it's not like we're not having a massive recession. We're not going, completely out of control. So, we're surviving, and, we've got all these minerals, and we're selling gold, and, TSX is doing well. It's good for capital markets activity. So that diversification is kind of helping, right? Even if auto gets crushed and steel gets crushed a little bit, it's not the whole economy. So that's the way I would kind of look at it. I think in the long term, Canada figures things out, whether that's a year or 3 years from now. It'd be crazy to think that Canada couldn't figure out how to just, get better at what it's doing. But nothing is a given in this world, right? So those are the two extremes. But, people want to be in and you hear two different stories. You hear a sell America trade, which is, oh, there's all this chaos and volatility in the US. I don't want to be part of that market. And some people are trimming their positions in the US, where others are like, I want to be behind the person that really cares about the economy. Every day that administration wakes up and they think about the economy, it. And they think about jobs and they think about investments, and you want to be part of that country, and you want to be invested in that country to get the benefit and the upside of someone driving that force. Whereas, some leaders aren't focused on that stuff, and they're focused on other things, and they just, you are what you focus on. So, and there's other people that are diversifying into the US and saying, look, hey, if something happens with CUSMA, I want to make sure I have enough US dollars. I want to make sure I have enough exposure to the US market. I want to be a part of that economy, and I want to be part of that growth. And I feel good with, all the things in AI and artificial intelligence and, everything else that's going on in the US. Just like a well-oiled machine, right? So that's kind of how I look at kind of the two extremes of the situations.
Yeah, no, I agree. And I want to be part of both sides, right? And when you're part of both sides, there's always going to be a different advantage, right? And when the dollar goes up, it's a good time to bring your money back, right? And when the dollar goes the other way, if it goes down, for the American dollar goes down, that's the time to go buy in the US. And that's the time to refinance your mortgages. And it's honestly, I think it's just understanding where you are, and there's always going to be a different advantage. Same thing with the real estate market. When prices are up, there's different advantages than when the prices are down, right? And I think the people who get caught are the ones who just don't understand what's going on at all. And that's why I wanted to have you on the show, to give some people some background, some understanding to this, because if you have a even general understanding about where we are, where the possibilities are, then there's going to always be advantages to take, and there's also going to be there's money to be made whenever you're doing this, and there's the right strategy to be applying, right? Just so you know you're doing this at the right time. So if you believe that the interest rates in the US are going to go down, then you just wait, right? And you're like, hey, this maybe if you want to move money, you just wait a couple months and do that then, right? It's just a little bit of planning. But the thing is, whenever I hear waiting, that's the part that um, opportunity costs come in, right?
Yeah, I was
You're
just gonna say,
not
yeah.
yeah, you're waiting for this perfect market, and you know what? It's always going to have like an opposite effect. You're like, hey, the market's up. Well, then you're if I have those conversations with people, they're going to like, oh, it's about to drop. Like, we're at the top, it's going to pop. The bubble is going to pop. If you're at the bottom, they're like, it's never going to improve. And you can always find an excuse for whichever market you're in. And I think all of it is just about, taking advantage of which market you're in, because there's always going to be an opposite reaction. Like, you could go buy a property at a great price right now. You could, it should appreciate. It's going to be the opposite all the way through. And I think people who just never change their strategies are the ones that have trouble. Did you know that there are more lending scams in the United States than anywhere else? I've actually come across many of them myself, and some of them are very good at looking legit. If you're interested in a list of lenders, please go to my website and get a list of verified lenders at CanadianInvestingInTheUSA.com/lenders.
Yeah, and I think even on that is the way. So I've been, looking at currencies for 15 plus years. I can't even tell you what's going to happen next year. Like, nobody really knows, right? And so regardless of what people say, nobody really knows. I mean, the economy is really hard to figure out. And what I would say is, even when people come to me and they say, great, you're saving me money on exchange rates and all that type of stuff, but should I buy now or should I buy later, right? And generally what I tell everybody is, try not to time the market. Like, I can't time the market, and I live this every day. Like, this is what I do. Okay. And so you're, retired now, and you've got this, and, you're spending all your time and you're looking at these charts as if you're able to figure this out, if it's, going up or down. I'm like, listen, the amount of time that you're going to spend and energy trying to figure this out, you're not going to beat the Goldman Sachs traders that, have way more intel, right, than everybody else. And two, to your point, is that, people are generally buying US dollars because they have an underlying reason to buy it. There's an investment, there's an opportunity, there's a franchise, or, whatever they're buying or selling in the US that has some sort of like positive ROI on it. And that's the reason they're moving that money into the US, or they're, buying a business or whatever, buying a house, whatever it is. And there's some, obviously some positive ROI built into that. If exchange rates just didn't change at all, if you could just say exchange rates will be exactly the same for the next 20 years, you just look at the ROI of the opportunity, the cash flows, and then you kind of make a decision. And the other thing that you kind of look at is, if you look at like CPP investments, like CPPIB, which basically is like the arm that manages or Ontario Teachers Pension Plan. Like, if you ever look at any of their like annual reports, Canadian, they're managing Canadian money, but they have massive exposure internationally into the US. It's not like they're waiting out a year to say, hey, what's going to happen with the rates or something. Like, they're doing deals all the time, and it's kind of like perpetual US exposure. Like, they've decided, okay, I'm going to have like 40% exposure to the US, or 60%, or whatever their portfolio mechanism is. It's not like they're going 60 and then 0 and waiting 2 years, and 60 and then 0. They're basically saying, hey, I'm going to be like 30% diversified into the US, or 60% diversified into the US. And they're just doing business, and they're trying to make money, and they're looking for deals. And, so it's always, I always say, look at the underlying thing first. Try not to time the market, regardless of if you think interest rates are going to go down or up, or this is going to happen with the economy, or that. I think when you try to time the market, one, you can spend a lot of time going down deep rabbit holes, and you're just either getting lucky or you're not getting lucky. I mean, like, people come to me and are like, oh, I waited 2 months and the rate got better. I'm like, great. You know what? Like, it really has nothing to do with what you did. Like, it's just, you just happen to get lucky. And it's the flip side. Oh, I should have bought two months ago, or I shouldn't have waited, or I should have waited, or, hey, like, like you just, I get 2 phone calls. They're all saying the opposite things, right? So nobody really knows, right? They're trying to analyze charts and tell me, hey, I see this and this. I'm like, listen, like, you can spend a lot of energy doing this, and you're kind of just spinning your wheels. It's either going to happen or not happen, and it's probably not a result of the analysis that you're doing that you're able to crack the code to the currency markets, right? Yeah. So yeah, just look at the underlying kind of investments, whatever you're looking to do, make a decision. And generally, whether currencies go up or down over, like, let's say, like, you do something for 10 years or 15 years, even if it's like a 5% change over that time, plus or minus, you divide it by 10 years or 15 years, it's not a big needle change, right? So even if something moves, like, let's say, like, 5% in 10 years, or 10% in 10 years or 15 years, whatever the time horizon of your investment is. And this is probably how I think CPP and these investment boards look at it, is that you just divide whatever that change is by 10 or 15 years. And it's like definitely much more manageable, right? So yeah, look, some people like to time the market. It's what they like to do. I am not one of those people. I convert as soon as I need to convert. The moment I know I have a decision to make to convert, need a reason to buy, let's say US equities, money came in, I don't try to, wait around and think, okay, is it today, tomorrow? I just got to make the decision, move on, because I just want to save my time and my energy in terms of, what I want to do. So yeah, that's basically how I look at it.
Day to day, it's going to change so minusculely.
Right.
In most cases, there could be like some sort of, big event that happens.
Yeah.
But in most cases, it's such a small amount that changes from day to day. So I agree. I just go when the investment makes sense, that's when I do it. Because you should be making money on your investment that's going to be much higher than the exchange rate difference.
Right. And we're seeing, in terms of like ebbs and flows over the last year, like, we still see a lot of people move money into the US. Like, there's just there's some percentage of the population, as we were kind of mentioned before, where it's like a sell America, or it's too chaotic and I don't want to, they're trimming their positions or whatever it is. And other people are just like, I want to be part of that economy, and I want to be part of that growth that's going to come. And we're still seeing a ton of activity for whatever reason, like whatever people are doing with their money in the US. And like, I don't always get to see the underlying reason, because they're just moving it between their own accounts. But the US is humming along. People are still doing business. Look at their GDP, right? It's doing well. So, I think the way to look at things is just look at the underlying thing that you want to do, and then make your decision, and then let currency be kind of a secondary, or third or fourth factor as a part of it. I'm not saying it's not going to be a factor. It can be. You can get lucky or unlucky. Yep. But really, you want to kind of drive your decision on, that whatever the fundamental thesis is.
Mm-hmm. Totally agree. Before I let you go, let's talk about Knightsbridge just a little bit, right? So for people who are like, hey, what is Knightsbridge? What does it do? Like, it's currency conversion, right? It's a tool to use this. Can you be able to walk us through like how someone would do that? Like, what does the step process, if they had some Canadian dollars and wanted to buy some real estate in the US, like, and it might not even be the way that I do it, but like, for instance, like the step is like, I usually call into the floor first, like maybe just walk people through how a transaction would work, just so they feel a little bit more comfortable with it.
Yeah, sure. So as I said, we've been in business for 15 years. We've been on Dragon's Den. We have been one of Canada's fastest growing companies, as Globe and Mail rankings, all that type of stuff. And, I think the first thing is when you go to exchange money at the bank, and if you're doing it for the first time, and let's say it's a Vegas trip or whatever it is, and you're just, buying a couple grand, you see the exchange rate and it's like 142. And you really don't know, is that good or is that not good, right? Because you don't really know what the bank is making. And generally making about 2 or 3 cents on the dollar. Ballpark is what they kind of make. And so what we basically do is we aggregate all our transactions. We end up buying it in billions of dollars, and we can get discounted rates from the bank as a result of that volume. And then so we buy it cheaper and we mark it up and sell it to you at a better rate than what you would have got from the bank. So if you're getting 142 from the bank, you might get like 140 from us, something like that, right? And you can always call your bank, you call us, you get a comparison quote, and you go from there. We recently came out with an online portal, which we're going to roll out to clients as well. You can, book everything online. Generally, if it's the first time you're doing it, you might want to call in and just learn about the different banks, different processes, different mechanisms. If you're sending a wire for the first time, then you can, give us a call. We'll help you basically do all that type of stuff. Some people move it between their own accounts. Some people move it to, pay third parties, lenders, title companies, things like that. But the end markets are generally, if you're a business that's importing or exporting, you're a consultant getting paid in US dollars, software company, you get US dollars, you convert it US to Canadian. If you go Canadian to US, you could be buying a house, you could be buying, paying for tuition. So you could be paying for tuition, that type of stuff. Basically, we help you move the money across and help you basically get a better rate.
Yeah, and there is a couple different ways, and I've done a couple different ways to take your money from your bank account in Canada and get it to Knightsbridge, and then they can wire it or get it to wherever you're trying to get in the US, like you were mentioning. You want to talk about like just a couple of different ways that I
Yeah,
can
sure.
get my
Yeah.
money
And I
to
forgot
Knightsbridge?
I forgot to do that. So it really depends on the bank you're starting from and the bank you're going to. Okay. And the currency you're buying and selling. So if you're going Canadian to US, there's three options. You can do a bill payment if we're listed as a biller with your bank, right? So you look at your online banking. If we're listed as a biller, you can pay us from the bank. Some of the banks have us as a biller. Very easy. You go on your mobile app online, you pay us that way. We move it into your US account, or we can pay a third party vendor in the United States, something like that. If we're not listed as a biller and you want it to go into the United States, or you need it in the same day, you can do a wire to us in Canadian, and then we can do a wire back to you, or to the third party. Generally, we can do it in the same day or next day, depending on the time of day that you do it. And then the other option is we can debit and credit your accounts. If you've got a Canadian and US account, we pull out of one account, put it into the other. We do the debit. It takes a little bit of time for that to happen, just because we're withdrawing it from your account. It's a slower process, but you don't have to go to the bank. And there's no fees or any of that type of stuff with that type of transaction, like a wire fee. So generally, if you're closing on a property, you get your mortgage a day before or something, and you need it down there, you need it down there. You got to do the wire. You're going to do the wire anyway to get it there. So the wire is a wash. We help you with the exchange rate. We get it down to the US. So there's debit and credit. There's bill payment. There's wire. If you're going US to Canadian, you can't do a bill payment. Bill payment's only for Canadian dollars. So you'd either have to wire it, or we would do a debit and credit. We've got a bank account in the US. Inside the United States, we've got a bank account in Canada as well. And if you email us, call us, use live chat, and say, look, these are the two banks that I have. This is the amount I want to do. What's the cheapest way to do it, or what's the fastest way to do it? We'll give you the options. Then the ball's in your court. You decide what you want to do.
Yeah, I've done all three different ways when I'm going to the US, or even when you're with the withdrawal from your account. I've had it go from a US dollar account in Canada to a Canadian dollar account, well, to Knightsbridge, and then back to a Canadian dollar account in Canada. I've done it that way as well. And then usually the way I do it is whenever I'm coming back from the US, I send the wire to your account, and I believe it's in Chicago, and then it comes up and shows up in my account, and never had any problems. Just sometimes you just have to wait a day or whatever, however long the time it is for it clear. Like wires are going to clear faster, debit from your account's going to take slower. So I just need to make sure that the money is real before they send it along.
Yeah, no, for sure. And it's basically just get a quote from your bank if you've never checked. Get a quote from us. We'll help you calculate the difference, and then it's in your court to decide if that's what you want to do or not do, and we go from there. We try to keep the banks honest, and we try to provide good service, and call us if you have any questions, things like that. We want to try to say we're a little bit more helpful than sometimes the banks. I mean, we specialize in this one real aspect of doing wires and moving money and getting it there, where sometimes you're dealing with a teller at the bank, and they're just not that they wouldn't know what to do. A lot of them do. It's just sometimes you might get someone that is like, look, I yeah, I haven't done a wire before, things like that. So
Yes. Raheem, thank you so much for coming on the show. The market forecast was very insightful. I think there's lots to take away, and I think that just having the knowledge that you just shared with us, you can, as things change, and you can see what you're looking for. When you see interest rates changing, you see other things changing, some of the aspects you were talking about. I think it's helped improve, just the way people look at what's happening and understanding what's going on, so that they're not going, oh, Glenn and Reem said it was going to go up or down. It's, hey, they can see that the rates are changing because of mortgage rates or interest rates or whatever, and they can know how that's going to affect the dollar, which I think is really helpful for people.
perfect. Yeah, no, thanks a lot for having me. I mean, we've done this a couple of times, and it's great to see your podcast grow. And I know you've done this for a long time. You helped a lot of Canadians as well. So yeah, it's great to always kind of connect with you at the beginning of the year.
That was a nice video. Bye.